Is Pfizer the little pill to cure what ails your portfolio? We'll take a look. We all know Pfizer. It's the biomedical pharmaceutical giant based in the United States. It has a market cap of $200 billion. What's not to love about a company that size? Well, I'm going to tell you what I like about Pfizer and what I don't like about Pfizer. What do I like about Pfizer? Let's start with the positives. Always start with the positives when you're looking at the stock market. Pfizer has strength. It has financial strength. The PE at 13 is relatively cheap for a company in the biomedical space. That's almost a bargain. The yield, 3-4%, very interesting for investors. So you've got a lot of cash flow, $3-4 billion in free cash flow. You have new patents, new medicines coming online all the time with Pfizer, also interesting. You have the balance sheet that can play in the pharmaceutical businesses, all of which are positive. If you say at $33 a share, Pfizer belongs in my portfolio, I think it's going to go to 36, 38, 40, and it's going to be a strong performer over time. I'm probably not going to disagree with you. But let me disagree a little bit with myself and say, what don't I like about Pfizer? I didn't like it that 5-6 months ago, it was buying back shares, says, okay, we're undervalued, that may be a good strategy. Then they also had the inversion deal with Allergan, the Irish company, to basically reverse the ownership of Pfizer to make it an Irish company and pay Irish corporate taxes. That tells me a little bit that management, rather than thinking only about the pharmaceutical business, is thinking a lot about manipulating, maybe a too strong a word, but it's kind of having, it's playing with the balance sheet. Never a great sign. Let's sum it up. What's to like about Pfizer? Pfizer's a giant. Pfizer pays its shareholders an interesting yield, 3-4%. It's got a lot of cash flow, all of which, when you're looking at a stock, is a healthy thing. What's not like about Pfizer? Pfizer has to be a little bit more in the game of politics than we would like. So it's at this point, it's got something of a target on its back. It's perceived as a company it's a bit aggressive when it comes to pushing the price of its stock up for the advantage maybe of management. Let's hope more for the shareholders. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.